Hello, world. Welcome, I am your host Mr. Stag. Today we will be discussing the JDcom Inc., ticker symbol JD. JD.com, Inc., also known as Jingdong and formerly called 360buy, is a Chinese e-commerce company headquartered in Beijing. It is one of the two massive B2C online retailers in China by transaction volume and revenue, a member of the Fortune Global 500 and a major competitor to Alibaba-run Tmall. The company was founded by Liu Changdong on June 18, 1998, and its retail platform went online in 2004. Liu Changdong was born on March 10, 1973, as a Chinese internet entrepreneur. He has been called the Jeff Bezos of China, and his company JD.com has been compared to Amazon due to its business model. Liu founded Jingdong as a business-to-consumer single retail store for magneto-optical products in June 1998 and later moved the company into an e-commerce website known as JD.com in 2004. Liu is the company's chief executive officer and expanded its e-commerce products from selling consumer electronics to less specialized items, which grew JD.com into one of the largest retailers in China. Liu Changdong parents are in the business of shipping coal from North China to the south. As a young man, Liu Changdong had an interest in politics. He graduated from primary school in the Jiangsu province and enrolled in the Department of Sociology in Renmin University of China, known for its connection to China's political elites, in 1992. However, finding the degree would not guarantee good job opportunities. Liu spent all his spare time learning computer programming. He graduated with a bachelor's degree in sociology in 1996, and later earned an MBA from the China-Europe International Business School. As a college student, Liu invested his income earned from programming work and family loans into a restaurant venture. The business failed in a few months, losing more than $200,000, which left Liu in debt. After graduation, Liu was employed by Japan Life, a Japanese health product enterprise, and successively served as the director for computers, the director for business, and the logistics supervisor. In June 1998, he started his own business Jingdong in Zhongguancun High-Tech Industrial Park in Beijing as a distributor of magneto-optical products, focusing on selling authorized products when counterfeit products were widely sold. Upon foundation, Jingdong Company was named after Liu Changdong himself and Gong Xiaojing, his then-girlfriend. They broke up in 2003. Liu had opened 12 brick-and-mortar stores under the Jingdong brand by 2003. The SARS outbreak in 2003 kept staff and clients of Jingdong at home and forced Liu to rethink the business model and divert to online business. Due to the outbreak, Liu's business lost over 8 million yuan. Liu launched his first online retail website in 2004, and founded JD.com later that year. In 2005, Liu closed off all brick-and-mortar stores and became an e-commerce business. In 2005, Liu received an offer to sell JD.com for 18 million yuan, which he rejected. In 2007, Liu employed a full-category strategy for JD.com, changing the company's business model from selling consumer electronics to large variety of goods. The company has become one of the leading e-commerce businesses in China. The company changed its domain name to 360buy.com in June 2007 and then to JD.com in 2013. The latter purchase is understood to have cost $5 million. At the same time, JD.com announced its new logo and mascot. It is partly owned by Tencent, which has a 20% stake in the company. Tencent handed over its e-commerce businesses Paipai, QQ Wangu and a stake in Yixin to JD.com, in order to build a stronger competitor to Alibaba Group Holding Limited. In 2015, JD.com and Tencent announced the launch of the Jingteng Plan, a portmanteau of the two companies' names, which will provide merchants with a complete solution to establish a brand and promote marketing effectiveness by linking JD.com consumption data with Tencent social data. JD.com provides online shopping and claims authentic low price and quality assurance, and customer first. The Jingteng Plan has made progress in three areas. Jingdong has approximately 170 million e-commerce platform users, and Tencent has the largest WeChat and mobile QQ users in China. The plan integrates consumer behavior data and social data. The Jingteng Plan integrates marketing solutions for shopping and social data. The precise orientation, closed-loop experience, user portraits, personalized creativity, unity of product and effect, and scientific measure of effectiveness are said to be the 6 major aspects of the Jingteng Plan. JD.com applied to go public in the US in January 2014. On the 22nd of May 2014, the date of JD.com's IPO, the stock price rose about 15%. On June 2015, JD.com launched a Russian site aims to expand its business to global. On June 2016, Walmart sells its Chinese e-commerce business Yihaodian to JD.com in exchange for a 5.9% equity stake valued at $1.5 billion. On October 2016, Walmart files 13G revealing it has nearly doubled its stake in JD.com to 10.9%. On February 2017, Walmart increases investment in JD.com to 289.1 million shares, or 12.1%. On November 2017, JD.com achieved a sales record of $19.1 billion in 2017 Singles Day. On January 2018, JD.com opens first of a chain of high-tech supermarkets 7 Fresh. JD.com is one of the largest internet company in the world and is the largest e-commerce company in China. JD.com has invested in high-tech and AI delivery through drones, autonomous technology and robots, and possesses the largest drone delivery system, infrastructure and capability in the world. It has recently started testing robotic delivery services and building drone delivery airports, as well as operating driverless delivery by unveiling its first autonomous truck. JD.com is China's leading one-stop e-commerce platform, providing over 500 million active customers with direct access to an unrivaled range of authentic, high-quality products, and helping leading local and international brands tap into China's fast-growing e-commerce market. It offers customers the best online shopping experience. JD.com is setting the global standard, delivering at amazingly fast speeds to provide a truly one-stop shopping experience for Chinese consumers. Using JD's unrivaled nationwide logistics network and sophisticated data-driven delivery technologies, customers enjoy same and next-day delivery standard, which is a level of service that no other company in the world can match. JD.com is able to achieve rates of approximately 90% of orders delivered the same or next day, a rate of fulfillment that no other e-commerce company of JD.com's scale can match globally. JD also provide comprehensive customer services and convenient payment options. Owing to the superior customer experience we provide, our loyal customer base has expanded rapidly. We had 305.3 million, 362.0 million and 471.9 million annual active customer accounts in 2018, 2019 and 2020, respectively. JD Logistics, which leverages the company's advanced technology and logistics expertise to provide smart supply chain and logistics services to businesses across a wide range of industries. JD.com has one of the largest fulfillment infrastructures of any e-commerce company in the world. As of June 30, 2021, JD.com operated 38 logistics parks, which are among the largest and most automated smart fulfillment centers in Asia. JD.com also leverages a network of approximately 1,200 warehouses with a total of approximately 23 million square meters, including warehouse space of cloud warehouses managed under the JD Logistics Open Warehouse platform. JD built the world's first fully automated warehouse in Shanghai, and we are currently developing our own drones delivery and automatic delivery robots. JD harnesses the power of AI in almost every aspect of their business, from designing algorithms that learn how consumers behave and predict trends in demand, to developing sophisticated speech recognition and voice fingerprinting technology that allows consumers to shop online using voice commands alone. Key areas of research focus include natural language processing, computer vision, and machine learning, as well as constantly enhancing the algorithms that power many of the most important parts of JD's business, such as search and personalization. A major risk to JD's business is China, ironically. In China, they are also subject to risks and uncertainties relating to doing business in China in general, including, but are not limited to, the following: changes in China's or global economic, political or social conditions or government policies could have a material and adverse effect on the business and operations, as well as changes in PRC regulation of Internet-related business and companies. On the bright side, the Center for Economics and Business Research released an updated forecast indicating that they expect the value of China's economy to exceed the US by 2028, which is half a decade sooner than expected. The CEBR also expects China to become an upper-income country between 2020 to 2025. China has increased its position on the global stage over the past 2 decades, as their GDP accounted for 3.6% of the global GDP in 2000, and at the end of 2019 it accounted for 17.8%. It is being predicted that China will have an economic growth rate of 5.7% annually from 2021 to 2025, then it will slow to 4.5% from 2026 to 2030, then to 3.9% from 2030 to 2035. In 2019, China accounted for 54.7% of the total global e-commerce sales. China's $1.93 trillion in sales was 58% larger than the combined $1.22 trillion of the next 9 countries in the top 10. Over the next 3 years, global e-commerce sales are expected to grow by $2.3 trillion, or 55%, from $4.2 trillion to $6.5 trillion. By the end of 2023, e-commerce sales are expected to account for 22% of all retail sales, up from 16.1% in 2020. Based on this data, I believe China's e-commerce market presents a great opportunity to generate returns for investors. With China having a market share of 54.7% in global e-commerce, and with the e-commerce market expected to grow by 55% over the next 3 years, JD could be a golden egg. In 2023, e-commerce will still only account for 22% of global retail, so there is still a lot of growth left in this sector. JD's current stock price at the time of this video is $85.13, with a market cap of $131.74 billion. The stock is currently undervalued according to Simply Wall Street by 40.4% with a fair value price of $143.72. The company has a P/E ratio of 23.4%. JD currently pays no dividend. Earnings per share of 23.39, a gross margin of 7.48%, a net profit margin of 4.24, and a debt-to-equity ratio of 5.2%. The company's earnings growth has been strong compared to the industry. Tencent's current stake is 16.98%, Li Changgung's current stake is 14.76%, and Walmart's current stake is 9.31%. Also, Tiger Global Management, a well-known hedge fund, owns 3.32%. Will JD.com surpass Amazon? Tell us what you think about the future of JD.com in the comments section below. Mr. Stag logging off.